Hello friends, welcome again to the channel of Trading Fountain. Today we are going to learn about what is derivatives and what is derivative trading. Also we are going to discuss what are the types of derivatives. And at the end of this video you will come to know why many traders do trading in derivative segment and why they are most profitable. So let's begin. First one is what is derivatives. Derivatives is an instrument derived from the value of underlyings. To understand this, I can take an example of crude oil and petrol. So here crude oil is an underlying asset and petrol is a derivative. As this crude oil prices moves up, petrol rates also starts to move up, and alternatively if crude oil prices goes down, petrol price also goes down. So derivatives are completely dependent upon the underlying assets. For an example, equity share of HDFC is an underlying asset and HDFC futures and HDFC options is a derivative of HDFC equity share. If HDFC equity share rate goes up or goes down, that will directly affect the future and options of the same equity share. Now, what are the types of derivatives? In this segment, mainly derivatives are classified into two types. First one is futures and second one is options. You people have seen types of trading in my previous video. If you have not seen, go to the I button and you can watch that video. In future trading, rather than buying a stock of any company, if you buy future lot of the same company, then you can say it's a future trading. In the same way, if you buy option lot of any stock rather than buying in a equity market, you can say it's a option trading. Most important points you should know about derivatives is, in derivatives trading happens with lots. The number of shares per lot varies depends upon the company or stock. But for indexes, in Nifty, one lot equals 75 numbers. And for Bank Nifty, one lot equals 25 numbers. As you all waiting to see why derivative traders are most profitable, because first point is, in derivative segment you can take such a position, if market moves anywhere up, down or neutral, you will make money until and unless there won't be any drastic movement in the index. And the second point is, they are less risky because volatility in stocks is much more higher compared to indexes. The stock may give huge profit also, but sometime you may end up losing everything. In the upcoming videos, I will be discussing about future and options in detail, along with how to do future and option trading with live examples and along with the strategies. Thank you for watching the video. Please do hit like, share and subscribe.